Welcome back, and we are now hearing Meta or Facebook's Bitcoin treasury play has now flopped, with 99% of their shareholders saying no to buying Bitcoin. Well, these are some indicators that we are potentially near the top of the market because there's so much anticipation that we're going to be seeing all these companies buying Bitcoin and doing what MicroStrategy is doing, and we're just not really seeing that. We saw GameStop buy some, and then what happened? The price of Bitcoin went down. This as the CEO of JP Morgan, Jamie Dimon, is saying that the US should stockpile bullets and tanks, not Bitcoin. We got a lot to discuss today. We're also going to be talking about Ethereum, Polygon, LITECOIN entering the mix, and also Internet Computer Protocol continuing to burn more coins. What in the Internet Computer is going on here? We got a lot to talk about. We talk about crypto, blockchain, and investing every single day on this channel. So make sure you guys are subscribed. Give this video a free thumbs up. Sometimes we do a little deep dive into individual cryptos or networks or technologies so that we can better understand what we are investing in, why we're investing in it, and also where this whole crypto market and financial markets are going. So join the channel by clicking subscribe. If you want to become a channel member, click the join button down below. Other than that, let's get into this crazy world of crypto. Now, we're going to be starting with what Jamie Dimon said, who, I mean, guys, this is no surprise. Jamie Dimon has been a Bitcoin hater for years, and he's also been wrong for years about Bitcoin. But either way, he is now saying that the U.S. should be investing in military supplies, not Bitcoin, to protect national security. On May 19th, Dimon told investors that JP Morgan will now allow clients to buy Bitcoin, but clarified the bank won't custody the Bitcoin and reiterated, "I'm not a fan." Now, why do you think the largest bank CEO is not a fan of Bitcoin? And why do you think that they don't want to custody the Bitcoin? That's not what banks do, guys. That's not what banks do. Banks have not been custodying your money, I think, since I've been on this planet. They do not hold the money you put in the bank, and they're loaning that money out for pretty high interest rates, 30, 40% on credit cards, 10, 11% on other type of loans. And meanwhile, they're literally using your money to make that money, and then they're giving you 0.001% as interest. And so why do you think that they don't want crypto? Because they would have to custody crypto one-to-one. They can't rehypothecate it like they're doing with your actual fiat currency and devaluing it over and over and over and over. And at the end of the day, it also comes down to, as a business, they see crypto as a threat. I mean, we've seen crypto continue to grow and grow and grow. Decentralized finance, the Trump family is now fully invested, both energy-wise, but also money-wise, in decentralized finance. And we just heard from them recently, a lot of the reason is because they were getting debanked by the banks because of political views. And so to hear, I mean, guys, I thought we were past this. Like, I feel like this generation is kind of over the endless wars, and hopefully they do stop. But this is not the solution to bring peace to the world. And I believe that a lot of crypto is, a pro-peace movement in a sense, because it's taking the money away from these giant banks that just want, let's stockpile, weapons. It's like, don't we already have stockpiles? And this is really what we want to be spending our money. We can't afford good health care for the nation. We can't afford to get homeless people off the streets. We can't afford to do a lot of different fixed roadways. Guys, they built a 1-mile track of a train to literal nowhere in like Nevada or California, and they spent like over $1 billion on a 1-mile stretch of a railway that led to nowhere. There's no beginning, no end. It's just a 1-mile like what? Why didn't we finish that, right? But no, let's put the money and let's build more war machines. It doesn't make sense. It really doesn't, especially with the world of AI that we're getting into, right? Where there's going to be more threats, not from like a war standpoint, but I don't know. Either way, the banks are telling you this is why you should put the money there, because that's what they're going to invest in. It's crazy. Meanwhile, we just heard from Jamie Dimon the other day. He said China is an adversary, but what I really worry about is the enemy within. Can we get our own act together with our own values and capabilities? This time is different. We have to get our act together and quickly. And essentially, what he's talking about is the whole economy, right? We have to build and produce things in this country, which we don't. We import a lot from the rest of the world. And so if we start tariffing them, we're going to be the ones paying for that. And if we're not a productive country instead of like in terms of producing things, well, then we're the consumers. And if we're the consumers, the producers are in control. And that is, I think, what he's talking about here. But guys, a lot is happening in crypto. And this is really what I am focusing on, because while they're talking about all this nonsense, right, and they're living in this world like, oh yeah, our clients don't really want crypto, it's a scam. Meanwhile, think about the clients who are utilizing JP Morgan. If they're telling the bank, we want crypto access, I'm pretty sure these are probably very wealthy investors, right? And so the bank knows that people are moving to this digital financial ecosystem and they don't want it. Meanwhile, we have Cantor Fitzgerald, which is Howard Lutnick's family's hedge fund or whatever you want to call it, firm, that he just passed off to his family because he is the commerce secretary here in the US. And meanwhile, they're launching a gold protected Bitcoin fund. So it's going to have Bitcoin and gold in it. That way, we know Bitcoin price is very volatile. And so there's downside protection because you would still have the gold, and gold, while the price does fluctuate, it doesn't fluctuate anywhere near where Bitcoin fluctuates. And so it's more of a store of value perspective, where it's a very steady hold on the price versus Bitcoin that moves up and down. And so we are seeing this whole transformation of the way that people are investing in crypto or looking at crypto from a diversified type of portfolio. And by the way, it's not just me saying this, and it's not just people who are against Jamie Dimon or the big banks. The vice president of the United States says, JD Vance says that crypto can help everyday Americans. And so this article kind of goes into who's actually using crypto. So data shows that about 1 in 6 US adults, about 17%, have ever invested or used crypto, while half, around 8%, have used it in the past year. I actually think these numbers are a little bit lower. I don't know where they get all the data from and how they aggregate it, because there's so many different places to actually purchase crypto. I'm sure they probably are using most of the exchange data. But then they don't probably take into account Fidelity, that doesn't make that information public, Cash App, and all of those other type of PayPal. And there's just so many places that you can buy it from. I don't know really how they're getting this data. I would actually say it's probably a little bit more, at least that have had some exposure into cryptocurrency. And so the share of US adults who said that they invested, traded, or used crypto is the highest among younger men. US adults, 17%. It's men, 25%, women, 10%. And then by ages, you can see only 8% were 50 or older. 25% were between 30 and 49, and then the youngest generation, 29%. So a lot of the younger generation are seeing this, and they probably are also seeing, like their parents are saying, just invest, because the boomer generation is completely disconnected. I mean, completely. They're like, just invest in something that has 7 to 9% a year. It's very safe, and put some into your 401k, and everything will be great. And then they're looking at their parents getting a full ride pension after working 25 years at a job with full health insurance and full all the benefits. And meanwhile, they're working 40 hours a week for probably $20 an hour, and they cannot afford even to go to the doctor. That's where we are. That's where we are. And so seeing these numbers doesn't surprise me. And this is an indicator, guys. The next generation, as they continue to get jobs or invest, they're not investing in the stock market. They're not investing in mutual funds the way that our parents did. And so that's the change, because as the older generation passes on, their portfolios are going to be handed over to the families. And what are the families going to do with it? I would imagine most are going to move it into more future. I mean, think about it. If you inherited, 1,000 shares of Coca-Cola Company, are you going to hold that? Are you going to hold that? Seriously? Most people are probably not. And they're probably going to sell it and then either pay off their debt or buy themselves a house or do whatever, but they're probably going to also invest in crypto. The world is changing and the way that people are investing is changing. And by the way, if you're not changing with it, that's fine. But this is where you're going to have winners, you're going to have losers. And hopefully most of us are going to be winners in these markets and in investing. Because guys, pay attention. Meta's Bitcoin treasury play flops. 99% of shareholders say no. So Meta, Facebook, is not buying Bitcoin. And this is, a lot of people keep holding on to this like, oh, well, they're going to buy Bitcoin. No, guys, this is the same Jamie Dimon mentality. We don't need Bitcoin. It's not safe. It's not a good investment. Plus we are kind of at the end stages of the bull market in 2025, right? We're already at all-time record highs. And while I do believe that as time goes on, the price is going to continue to go up, it is a very bad idea for corporations to be buying Bitcoin at the top of the market. Believe me, guys, once the bear market hits, and it will, these companies are going to have so many issues that they're not foreseeing now. Their investors are not foreseeing now. You are probably not foreseeing this. We on this channel do. This is why we're talking about the MicroStrategy trade, because if the prices start to drop, once MicroStrategy's price, the price of Bitcoin drops below MicroStrategy's dollar cost average, which is about $70,000, I think it's gonna cause panic in the market because we haven't been there before. And especially if we're in a downturning market, if we're in a rotation into a bear market, because there's no recovery for them. There's no way for them unless they sell, which they say they're not going to do. And so I think MicroStrategy is going to be fine. The shareholders, that's a whole nother story. But that we're going to be holding for another day. Anyway, moving right along, a lot of progress in crypto outside of just Bitcoin and the banks and all of that. Because now we're seeing the SEC says that crypto staking guidance is a major step forward for the US, according to the Crypto Council. Let's get into this part. So as we talk about it regularly, we have to look at the aggregate, right? All of the information combined. A lot of people, they'll see one article and say, oh, boom, we're going to be staking ETFs, go buy immediately every staking crypto. And that's not necessarily the case overall. But this is very positive because the SEC issued new guidance on crypto staking, widely seen as a major win for the crypto industry. In a May 29, 2025 statement, the SEC's said protocol staking activities such as cryptocurrencies staked in proof-of-stake blockchains do not need to register with the Commission transactions under the Securities Act. The agency new guidance marks a major step forward for the U.S. crypto policy. The Crypto Council said the SEC has now recognized what we've long argued, that staking is a core part of how modern blockchains operate, not an investment contract. That clarity is critical. Now, this is critical for many reasons, right? They're trying to get staking in the ETFs. They're also trying to, make sure that companies that are acquiring any of these cryptos can also get the benefit, and also, the protocols themselves and people invested in the protocols, they want to be able to actually stake. Like if you look at BitLicense in New York, they don't allow the exchanges to stake coins for their customers. They can do it in every other state in the country except for New York because of the BitLicense. Now, again, New York was very in line with the previous administration, kind of going against a lot of crypto. But I think that we will see a change in that. But now that we have clarity from the SEC, because I think that it seemed like New York didn't want to overstep what the SEC was doing from their BitLicense perspective. They didn't want there to be like any opposites, right? So if the SEC said one thing, BitLicense didn't want to be opposite because then they'd be in a battle and two regulators battling. I think just they didn't want to deal with it. And so now that the SEC has clarified staking is not a security, what is New York going to do? So there's many different aspects to this where this is a positive thing. But again, a lot of this is going to be a longer term. But it is going to be very important to pay attention to, because remember, if you're holding money in a bank like JP Morgan, you're getting almost nothing, right, as interest, 0.01% or 0.001%. Meanwhile, they're charging credit card customers 30%, and they're making, $40-50 billion in profit a quarter, every quarter. Most of the banks are. And so keeping that in mind and understanding if you can put your money into USDC and you're making 5% versus putting it at a bank and making nothing, what are you going to do? And if you can put some of your investments in a yield bearing asset and you're going to make 7% in staking rewards a year or 5% in staking rewards a year versus maybe 1 or 2% in dividends potentially. And it's, by the way, like your staking activity, yeah, it's based on network activity, but it's not necessarily based on I guess it is kind of based on revenue. It's like a new revenue model because previously, like companies that give dividends, it's because they're making profits, and so it's based on the revenue, right? How much they're making versus how much they're selling, or stock buybacks. It's the same kind of concept. But with staking, you're going to earn a fairly consistent yield over time. With USDC, I mean, you can earn 5 to 10% on USDC, and it's fairly safe investment. Again, there's caveats to everything that's safe, but you guys kind of get it. Anyway, moving right along, and this kind of goes with what we were just talking about with staking. Ethereum futures data and network activity growth back the Ethereum price strength. Now, we've been talking about Ethereum for a while, and I do think this is a play right now. This is a play on the markets, a trade on the markets, because here's the deal. Ethereum still has the most usage. It still has the most DeFi. It still has the most interoperability. It still has the most smart contracts. It still has the most institutional usage. I can keep going on and on and on. You guys get it. Solana has not performed. Solana has not provided this ecosystem of crypto what we expected. It was literally a grift. This whole freaking... I've been telling my viewers since Solana launched, and by the way, just because it is a grift doesn't mean that you can't make money on it. Obviously, Solana went from $8 to $260. But here's the deal. I've said from day one, when Solana first launched, this was built by and for the billionaires. And I guarantee you, most people who are going to be in the comments, but Cryptoviser, you were wrong on Solana. Yeah, I was from a price perspective, but not from a network perspective. And so, yeah, you can roll the dice and gamble on a shit investment, or you can invest in real fundamentals, which is what we talk about on this channel. And so between Ethereum and Solana, it's always been Ethereum. Solana's trying to overtake Ethereum the same way that most cryptos say, oh, well, we can do this better than Bitcoin. We can do this better than Bitcoin. We can do this better than Bitcoin. And meanwhile, Bitcoin's still number one by a long shot. And Ethereum's number two by a long shot. Most usage, most network activity, most layer two usage, most scalability, most DeFi, most smart contracts. Keep going on and on and on. And there'll be people who say, but Cryptoviser, you were wrong. It didn't. Yeah, from a price perspective, it didn't, but it doesn't matter because I'm not investing on a gamble, right? This is not the place to gamble. You go to the casino to gamble. Crypto, there's fundamentals. You can have almost guarantees. There's a lot of people who, oh, well, Cryptoviser, you were wrong on Solana. I bought and I made a lot of money. Well, did you sell? And if you did, great, congratulations. But most people still didn't, even if we went to all-time record highs, because they just think that it's going higher and higher and higher and higher and higher, and Ethereum's never going to catch up and it's going to overtake it. Meanwhile, all that Solana has delivered this cycle is meme coins. Another fucking grift, right? It's the same thing. Same thing as last cycle. Why did Solana get so much hype last cycle? FTX, Alameda. It was the FTX coin. Hello, all the billionaires in it. Anyway, I'm not going to get all into that because it's crazy how Solana has come to the forefront. All they've created was meme coins, right? We're 6 months after the meme coin fiasco, the beginning of the year, and Solana still has not produced a fucking thing. And there's people who say, oh no, but Ethereum's not as good as Solana. Based on what? Because Solana has better transaction throughput? And by the way, it's not just me saying this. The Solana, I think it's the Solana co-founder, said anybody who's telling you that Solana has already been completed and is the best is lying, effectively. This is not the exact words that they used, but they basically said Solana is far from complete and far from the best, right? And I agree. If you're saying, oh no, Solana is better than Ethereum, you lost the plot, because clearly it's not, just based on market cap. But then if you go in the network data, it's not either. Anyway, this part of the video is about Ethereum, not Solana. And you guys know I can go on and on and on. on about Solana. So make sure you guys are subscribed to the channel. That way you never miss any of those rants, and also give the video a free thumbs up. But let's get back to Ethereum and what I was talking about. So when we're talking about Ethereum, yes, Ethereum from a price perspective or a price performance perspective has not performed, and it hasn't done that well. But what we have been seeing is we've been seeing a switch back to fundamentals. And I believe that this is kind of where we are in the final stages of the market, because we're going to start to see rotations out of some coins and into certain coins. And I think a lot of it has to do with basically the fundamentals of the network, what these networks actually achieve, what they actually do. And so investors are concerned that declining interest in dApps or decentralized applications across all blockchains is a key reason why Ethereum still trades 48% below the October 2021 all-time high of $4,800. The industry's TVL in DeFi, total value locked, currently is at $122 billion, and it's still 43% below the December 2021 peak. But you guys have to remember, the December 2021 peak, this was the peak in the markets, right? So the markets were at all-time record highs. We are now there without all-time record highs. And so these, in my view, are potential lagging indicators, right? The things that we see in the market, and by the way, I'm going to be doing a full video, something titled like, I tried trading crypto for 8 years, or I traded crypto for 8 years, something like that. And basically in that video, we're going to be talking about like what you have to look for in the fundamentals, because otherwise you can get to this part in the cycle and you're cycling out of Ethereum, putting it back into Solana because you're like, oh no, Ethereum has underperformed and Solana has performed, so now I need to buy into Solana. It's like, no. The Solana trade is over. It was over in the meme coin fiasco. Go look at the on-chain data. Ethereum is going to be the rotation. I've been telling my viewers this for months now. As people rotate out of Solana, which they have, right? 50% reduction in the market cap since the all-time high. That money didn't just disappear. It moved into other coins. It moved into other ecosystems. And by the way, Ethereum is not just Ethereum. Ethereum is also everything built on top of it. And Polygon is the undisputed king of USDC payments. Now, we covered this recently in a Polygon video, but effectively, Polygon is the most used ecosystem for stable coins, specifically USDC. I believe Tether, they're pretty high up there, but remember, Polygon is on the Ethereum ecosystem, and I'd say most of Ethereum is really, a lot of it is a USDC now. And you can see Polygon hit a new all-time high of almost 3 million USDC active addresses in April of 2025. And so while the market is moving down on Ethereum and Polygon, we see the network activity increasing. These are fundamentals. This shows you right here, there's almost double the amount of active addresses using USDC on Polygon than Solana. Why do you think that is? And by the way, if you remove the meme coin activity from Solana, it's probably almost nothing. And so Polygon is being used for real payments. Polygon is being used for real, interoperability and DeFi, and faster, cheaper, more efficient than Ethereum, which it's supposed to be, right? Because they want you using layer 2s, and that's okay. People say, no, Cryptoviser, we don't want to use a layer 2. It's like, if you get a pizza delivered, are you calling the pizza place to get the pizza delivered? If you're getting Burger King delivered, you're not calling Burger King to get it delivered. They're calling a third party to do it for you, right? And so does that make the delivery any worse? No, you're still getting your Burger King. You're still getting your pizza. It's just getting delivered by a third party, right? It's a layer 2. This is a layer 2 built on layer 1. And so when Polygon does well, Ethereum does well. When Ethereum does well, Polygon does well. And now we have LITECOIN joining the party. And by the way, we're going to be talking about internet computer in just a minute here. But before we go there, LITECOIN is officially joining the ag layer ecosystem. LITECOIN's VM is now built with CDK and Bitcoin OS. They say boomzinga. I don't know what the hell that means. But anyway, now I used to talk about LITECOIN a lot. But LITECOIN, while it does have its benefits, and it is the most similar to Bitcoin, and really one of the only proof of work systems outside of Bitcoin left, because most of the ecosystems moved to a proof of stake. But they haven't really done that much. And I was wondering when they were going to join the party, and here they are. So let's understand a little bit more about this. Litecoin has entered the layer 2 development space with the launch of LitVM, a zero-knowledge rollup chain aimed at expanding the nearly 14-year-old network's functionality. The announcement was made during the Litecoin Summit, signaling a major step forward in smart contracts, DeFi, and cross-chain interoperability. Developed by Lunar Digital Assets using Bitcoin OS and Polygon's CDK, LitVM brings smart contract capabilities to Litecoin for the first time. The chain is fully compatible with the Ethereum virtual machine, allowing developers to build dApps using native Litecoin assets. So that's pretty much what we were just talking about. Litecoin is on Polygon. Litecoin is now interoperated with Ethereum. We still have blockchains in the top 10, multiple. It's kind of funny and sad at the same time that have no connection to the Ethereum blockchain, which is, I mean, almost being in 2026, these coins should not be in the top 10 at all. Fundamentally, base layer technology, they shouldn't be there. And meanwhile, Litecoin is now fully interoperated, right? And it's much harder to implement things on Litecoin, like on a proof of work system, than it is on a proof of stake system. And we have these proof of stake systems that they have no DeFi. They have no cross-chain interoperability. They have no Ethereum virtual machine or ZK rollup compatibility. And now you have Litecoin, which is effectively not really developed and trying to stay, they're trying to stay very in line with where Bitcoin is from a technological standpoint. Now they are connected to Ethereum and the layer 2 ecosystem, and they're building on Polygon. And so now that Litecoin has done that, there is absolutely zero excuses for any chain, for any blockchain to not have this capability at the base freaking layer. And so do with that what you will, but for me, from an investment perspective, it all comes down to the fundamentals at this point. And it looks like Polygon, Ethereum, Litecoin, and Bitcoin are kind of there. And we're seeing these other coins, Solana, I mean, it's really, really unfortunate. Anyway, moving right along to my favorite part of the video, Internet Computer keeps burning coins. But before we get to the coin burning, there's a pocket of liquidity sitting on exchanges. And make sure if you're up to this point in the video, you're giving the video a free thumbs up. I upload these videos almost every single day, completely for free. All you got to do is give the video a thumbs up. But if you want to help support the channel financially, click the join button down below to learn more about becoming a channel member for just $1.99 a month. $1.99 a month. But if you can't afford that or don't want to pay it, at least give the video a free thumbs up. So we have been talking about internet computers, activity, and network fundamentals and what the metrics look like for quite a while. According to CoinGlass, a large pocket of liquidity, about $7 billion in liquidation leverage, is sitting on exchanges for Internet Computer at 440. Now, when I'm recording this video, Internet Computer is, $4.84. And so if we get to 440, that's $7 billion? $7 billion in liquidation leverage, effectively meaning that we could see a liquidation event, right? These are longs using leverage. And so if we go down by a certain percent, they get liquidated. And liquidations typically cascade and create more liquidations, and those cascade and create more liquidations. And that's typically where you see the downward price movement very, very rapidly, where most people will call it a crash. Now, here's the deal. Whether this is going to happen in Internet Computer or not, I don't know. But typically in these type of liquidation crashes, we do see movement then correcting to the upside as well if we have a downside move. What's important to look at is what's been happening recently in Bitcoin and Ethereum. Now, there's been this whale on X called James Wynn, who is using Hyperliquid, which is like a leverage trading type of platform. And he was using like 40x leverage on Bitcoin longs and also Bitcoin shorts. And then he got liquidated for like, I don't know, they said something like $1 billion or $40 million, something like that, complete liquidation. And so we are starting to see these high leverage trades. Now, this James Wynn character, I don't know who they are. Sometimes these online traders pop up and they're part of like larger networks. And so they could also be counter trading what they're posting because they know that people are going to be trying to liquidate them, right? Trying to close out their position. And so this is very interesting with Internet Computer to see this pocket of liquidity sitting on exchanges with leverage because that means that there's a lot of people who are kind of pushing forward for the ICP ecosystem. But it also means that you're going to have these counter traders out there that are trying to push the price down. And honestly, I kind of look at it like if they have $7 billion of liquidation leverage on exchanges on ICP at $4.40, let's go there. Let's go to $4.30. Let it all get liquidated. Maybe we'll go down to $2, right? But I personally, based on the markets and what we've seen, if this happens rapidly, I'm not saying, over the course of 2 weeks or 3 weeks, if you start to see a liquidation in ICP over the course of like 24 hours, and it happens very, very rapidly, we go $4, $4.40, then $4, then $3.80, then $3.60, then $3.20, very, very rapidly, boom, that's a liquidation in my view, especially if the rest of the market is not necessarily liquidating that fast or rapidly. Typically, we may end up seeing an upside. But a lot of people are going to say, Cryptoviser, ICP is down 60% on the year. Why do you keep talking about it? Why do you keep bringing it up? Is this coin even worth it? And I understand those questions that you're asking. I mean, they are valid questions to say, like, is ICP really going to do well? I mean, it's down 95% or 99% from its all-time record high. Even just in the last year, we're down 60%. And yes, this is an underperforming coin for sure. But I remind you guys, if you just zoom it out a little bit further than this, and you go to 2023, we're at $2.90. So we're already almost double that. And we did do about 8x from that to about $20. And so you guys have to look at the market without the FOMO. Listen, Internet Computer may drop to $2. Maybe it's going to drop to a penny, right? This is why you don't invest more than you could afford to lose. Only put a certain portion of your portfolio in the asset. And I'm sure most of my viewers are probably fairly diversified. I mean, previous cycles, we were talking about holding 40 different cryptos. I mean, at some point, I think I had 50 or 60. I started to count and I lost count because there were so many cryptos in my portfolio. Where we are in the cycle, I don't necessarily know that's a great idea to have 50 different cryptos. Maybe it is, maybe for sure, maybe it is. But I don't know whether that's a good play for most people, right? To track 50 different cryptos on a daily basis and then see them go up and down. But then at the same time, if you have 50% of your portfolio in ICP and then ICP drops 50%, that's not good either, right? And so you have to really balance what you're investing in and why you're investing in it, right? I look at ICP as a potential 10x moonshot here, right? Especially with the AI capabilities that they have. And by the way, I'm recording this before the big AI implementation and summit that Internet Computer is having in the beginning of June. You're probably watching this after that conference, so that maybe the price jumped up based on whatever they revealed in that conference about the technology and capabilities. But the bottom line is not where the price is today versus when you're watching this video. It's really about the fundamentals of the network. And this brings us to the Internet Computer coin burning. Now, ICP coin burning is very complex to understand. It's not simple as just burning coins based on a transaction, and this limits the supply. There's a whole mechanism on Internet Computer called cycles. And effectively, the way the Internet Computer works is by creating cycles which pay the network. And when you create cycles, you burn ICP. And then when you are burning burning cycles, it creates ICP, not at the same rate. And again, I'm giving you guys the most easy to understand explanation without going into too much detail, because then you're going to get lost in the explanation, right? Generally speaking, you have to understand what coin burning is. But the difference here is that there's cycle burning and proposal fee burning, and then there's transaction fee burning. And transaction fee burning, you could see, is significantly less than the cycles burning for ICP. So effectively, the chart shows the total amount of Internet Computer coins burned. ICP is burned by converting ICP coins into cycles, which are used to pay for computational and storage costs by dApps and smart contract developers on the network. Fees from rejected proposals. A proposal's neuron incurs a 10 ICP fee for rejected proposals, and Internet Computer transaction fees, which cost 0.0001 ICP per transfer or approved transaction. And so you can see most of the coins are being burned to create cycles to then go and pay the network. And then those cycles turn into ICP as they're being used. And then there's also fees for rejected proposals. That way there's not a lot of, spam proposals. And then transaction fees. And it's a very, very small amount that's burned per transaction. But if you think about the scalability of the Internet Computer, if they are able to achieve even a small portion of what they are, their target is, right, which is AI, high performance compute, AI compute on chain, storage, and file verification on chain. If you have this happening at a very large scale, because AI compute, it's constant pinging the network, right? Compute this, compute this, compute this, compute this. If that's constantly happening, you're going to have so much transactions that this 0.0001 ICP per transfer will add up, and it's going to slowly, very, very slowly decrease the total ICP that are in existence. Because one of the biggest concerns that I see in the comments on my channel about ICP is that ICP has no maximum supply. Now, I've heard differing opinions about this, whether there is a maximum supply, whether there isn't. I mean, according to CoinMarketCap, the maximum supply is infinity. But you can actually not just take what somebody says of, oh, Cryptoviser, there's unlimited coins in circulation. While that may be true, if we look at the actual ICP supply on the Internet Computer's dashboard, which anybody can go to, and you pull this up to all, this shows us since the network was created, the total supply of ICP was 400, we'll just say 470 million ICP, okay? Now they have circulating supply and then circulating supply with the old definition. I don't know what that means. It says total supply is the sum of all ICP tokens that exist, whether they're liquid or staked. Circulating supply is defined to be identical to the total supply. I don't know what the F that means, but either way, 470 million total ICP, and currently there's about 530 million ICP. So yes, it has increased by about 20% in the last 4 years. So that's about 5% a year inflation. Is that a big deal? I don't know. I don't know. Yes, clearly there's some dilution here, but we also have to understand other tokenomics besides just the supply. We also have to understand how much are staked, because remember, the network has what's called the network nervous system, which is effectively how the network operates. And people stake their coins in the network. And right now there's 43.5% of the total supply is staked, and much of this for 8 years. And so this is a lot of coins, and the 8-year stake continues to increase by a lot. It increased just in since the beginning of 2020, it increased by about 50%. So while yes, we have had an inflation of about 20%, we've also had very high long time staking increase by 40% as well. And so that's another tokenomic to me that says people are staking their coins because they believe this network is going to continue to grow. And I would imagine most of this 43% are insiders and developers and people who are working to build out on the Internet Computer. And so they're incentivized by locking their coins into the ecosystem to make this shit work, right? And so for me, this somewhat overrides the fact that the maximum supply is infinite. Obviously, this is something that needs to be addressed. Obviously, this is something that needs to be looked at. But then you could also look at it the same way as if this is the AI compute platform for the world, for the globe, and we know AI companies are already looking at what Internet Computer is working on and trying to achieve, then there is the possibility that the network usage and the value of the network will grow and outpace the potential inflation that will be occurring within the network. That's what it could look like. And you guys also have to remember, like, as these networks grow, there's more users, there's more investors, there's more governance participation. And so if holders continue to see, 5% inflation a year or whatever the actual number is, and they think that this is too high, you would imagine that they would probably come in and put in a proposal to slow this down by creating some type of mechanism, either increase the burn rate or decrease the emission rate of the network. And they would put their money behind pushing this proposal through. And so I do think that this is something that ICP does need to look at. But we also have to look at the increasing usage of the network and the total ICP burned. The more ICP we see burned tells us literally how much the network is being used. And it's not just being used by, NFT bullshit trading. This is being used by people who are putting their money into the network to then go and process AI, compute data, storage, all of this other stuff that Internet Computer is capable of. And we can see that data right here, because why would somebody create cycles with their ICP if they weren't actually using the network? And so the cycle burn rate gives us a direct correlation of the network usage, whether seen or unseen. Why have we seen this huge increase, right? When did the increase start? The increase started in September of 2024, where before September of 2024, we were burning total a day about 173,000 ICP. Now it's 1.9 million a day. 1.9 million a freaking day. Oh, sorry, this is total. This is total. You guys yelled at me last time on my video that I was talking about this because you guys are like, Cryptoviser, this is total burn. This is cumulative. This is not per day. Okay, I'm glad I remembered that, because otherwise I'd have you guys yelling at me again in the comments. But okay, so this is total burned. Okay, so even if we look at that, right? We had 176,000 total burned in September of last year, less than a year before I'm recording this video. And now it went up to 1.9 million. 1.9 million, so it 10x'd. So either way you look at it, right? Even if it's per day or per total, it doesn't matter. It's still a 10x. And so we're seeing a 10x in the total ICP burned in less than 1 year, which tells us that there's a direct correlation between this number and the network usage. But people are going to say, but Cryptoviser, we haven't really seen anything. Yeah, we haven't seen anything. That doesn't mean they're not working on things behind the scenes. And as I just said, by the time you're watching this video, we already know what the June 3rd, 2025 ICP conference was about. When I'm recording this, I'm recording it before that, so just keep that in mind. This is probably going to go up even more, especially if Caffeine AI and the new AI capabilities that Internet Computer have been working on are as crazy big as I think they're going to be. And again, I'm looking at the data. I'm not guessing, right? People would say, oh, well, Cryptoviser, this is not good. They're just burning coins. But what are they burning? There's no product. Guys, if they're testing a product, which we know they're doing, if they've been developing AI capabilities, which we know that they've been doing, and they started their AI journey really at the beginning of 2024. Middle of 2024 was when we started to see them like, oh yeah, we got to put more money and time and focus into this. They started that really a few months before we started to see this jump, which tells me at least, they probably were developing heavily in the beginning of 2024. And then towards the end of 2024, they started testing the capabilities of the new AI functionality or projects or products. And based on this data and at the 10x in total ICP burned, this is a parabolic shot up in usage of the network, paid usage of the network. And so to me, clearly they've been testing AI capabilities. And I'm going to keep a very close eye on. This is the one network where you can literally look at this, and it's a direct correlation between how much ICP are being burned and how much the network is being used. And so once they start to get some traction in the AI front and potentially some implementation with other AI companies or capabilities, this is going to increase even more. And so what does that mean? Back to the fundamentals. There's still crypto projects in the top 10, top 20, top 30 have zero interoperability, zero DeFi, zero AI capability or functionality. Most of them have zero compute capabilities. This is the way that internet computer can compute on chain. So when I look at all of this, guys, things are looking really good. And I think 173,000 ICP in a month burned. And if you look at the previous months, right? January, 274,000, February, 284,000, March, 241,000. And while, yeah, it's been fluctuating, we're still doing pretty good and way higher than where we were just a year before. And I also found this website which shows you the burn and mint rate of ICP on the network in live time. I don't know if this means anything for you guys, but I figured it would be fun to look at. But yeah, I mean, let me know what you guys think about everything we talked about today in the video. We talked about really the whole macro environment going on in crypto and really looking at it from a fundamental and a data perspective, not from a feelings or I want this to happen perspective, because we don't know what is going to happen. And these prices are not going to just go up because we want them to. The prices are going to go up if the fundamentals of the network are there. And we know that they are because the big banks are not happy about it. Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up, hit the subscribe button, check out my other videos, and I'll see you when I see you crypto on.